The AI bubble is here? Seth Klarman's brutal reality check. What if I told you that one of Wall Street's most respected investors believes the AI boom is starting to look dangerously familiar? Not because AI isn't revolutionary. Not because companies like OpenAI, Nvidia, Microsoft, Google, Meta, Anthropic, xAI, and Amazon aren't building incredible technology. But because investors may be repeating one of history's biggest mistakes. Legendary value investor Seth Klarman, founder of Bopos Group and often called the Oracle of Boston, has spent decades identifying market bubbles before they burst. His philosophy is simple. At the root of all financial bubbles is a good idea carried to excess. And according to Klarman, AI could be the latest example. So, are we witnessing the greatest technological revolution since the internet? Or are we watching another trillion-dollar bubble inflate before our eyes? Let's dive in. Why everyone is betting on AI. It's almost impossible to avoid AI in 2026. Every earnings call, every startup pitch, every major tech conference, everything revolves around artificial intelligence. Companies are spending hundreds of billions of dollars building AI infrastructure. Entire data centers are being constructed just to power next-generation models. Governments are treating AI as a matter of national security. Investors have poured enormous amounts of capital into AI companies, driving valuations to unprecedented levels. Some startups with limited revenue are being valued at tens or even hundreds of billions of dollars because investors believe they'll dominate the future. The excitement feels limitless. And that's exactly what worries Seth Klarman. History doesn't repeat, but it rhymes. Klarman has watched this movie before. In the late 1990s, everyone believed the internet would change everything. They were right. The internet transformed the world. Amazon survived. Google was born. Online commerce exploded. But thousands of internet companies disappeared. The technology wasn't fake. The valuations were. That's an important distinction. A revolutionary technology can still create a financial bubble when expectations outrun reality. That is Klarman's core warning. AI is real, but are prices too high? Let's be clear. Klarman isn't saying AI is useless. Quite the opposite. AI is probably one of the most important technologies ever invented. The question isn't whether AI changes the world. The question is whether investors are paying too much today for profits that may arrive years, or even decades from now. Markets often price perfection. Any disappointment can trigger enormous corrections. We've seen this with railroads, electricity, the internet, cryptocurrency, and possibly AI. The trillion-dollar spending race. Here's what makes this AI cycle unique. Tech giants are investing at a scale never seen before. Microsoft, Google, Meta, Amazon, OpenAI, Anthropic, xAI. Each company is racing to build larger models, buy more GPUs, and construct massive AI infrastructure. Capital expenditures have exploded across the industry as companies compete for AI leadership. Yet, analysts continue debating how quickly these investments will translate into sustainable profits. Investors assume all of this spending will eventually produce enormous returns. But assumptions aren't guarantees. The revenue problem. Here's where reality starts getting complicated. Training better AI models costs billions. Running them costs billions more. Competition keeps driving prices lower. Many companies are still searching for business models that generate consistent long-term profits. Consumers love AI. Businesses are adopting AI. But monetization hasn't necessarily caught up with investor expectations. That's one reason some researchers argue the AI market combines genuine technological progress with pockets of speculative excess rather than fitting neatly into either bubble or revolution. Missing the winners can be expensive. Ironically, Klarman himself has admitted that avoiding AI entirely has carried an opportunity cost. He has acknowledged missing some of the biggest AI-driven winners, including early opportunities tied to companies benefiting from the AI boom. That highlights an important lesson. Even legendary investors don't capture every major trend. The goal isn't to predict every winner. It's to avoid permanent losses. Why value investing still matters. Klarman built his reputation around one concept: margin of safety. Instead of chasing excitement, he looks for businesses trading below their intrinsic value. He focuses on downside risk first. As Klarman has often emphasized, many investors focus on how much they can make while paying too little attention to how much they can lose. The economic times. That philosophy becomes especially important during periods of market euphoria. The new AI arms race. Today's AI race is bigger than just Wall Street. It's becoming geopolitical. The United States, China, Europe, the Middle East. Everyone wants leadership in artificial intelligence. Governments are investing billions. Cloud providers are expanding faster than ever. Chipmakers can't manufacture hardware quickly enough. AI is no longer just a business opportunity. It's infrastructure. It's national competitiveness. It's strategic power, which means the winners could become some of the most valuable companies in history. But history also tells us that not every participant survives the race. What happens if the bubble pops? Suppose AI valuations fall 40%. Would AI disappear?
No.
The internet didn't disappear after 2000. Cloud computing survived. Smartphones survived. Electric vehicles survived. The technology usually wins. Speculative valuations often don't.
So,
Is the AI bubble here? The honest answer is maybe. AI is almost certainly a genuine technological revolution. But history shows that revolutionary technologies often attract speculative capital, inflated expectations, and periods of overvaluation before settling into sustainable growth. AR-14. Seth Klarman isn't saying AI will fail. The companies changing the world may ultimately justify their investments. But not every stock, startup, or valuation will. As investors, the biggest question isn't, will AI change the future? It's, are today's prices already assuming a perfect future? If you enjoyed this breakdown of AI, investing, and the future of technology, don't forget to like, subscribe, and turn on notifications so you never miss our next deep dive.